We're going to talk about the economy, the earnings season's wrap up, and what's moving the market going forward. I'm Peter Switzer.
I'm Paul Rickard.
And we're mad about money. All right, Paul, the economy, is there anything there that's actually making you positive or negative about the economy going forward?
Well, I mean, you have been quite vocal about the investment numbers due out tomorrow, which of course is our private capital expenditures. Let's just see whether the challenges in the resources part of the economy is being replaced by growth in other parts of the economy. Great
segue for what I want to say. Great segue.
So that's important data. I mean, I think mainly, the economy's chugging along, Peter. I know, consumer confidence last week reached a high for best top number in 3 years. Yeah, unemployment's down at 5.7. There are some good signs.
Good to me.
It sounds good to you, but it's just chugging along.
Yeah. Look, I would really love to say the economy's going gangbusters, but it ain't. But in a brilliant story I wrote this morning, Peter,
I've never met a story from Peter Switzer Esquire that's not brilliant. Yeah.
But Matt Hassan, who's an economist at Westpac, he looked at those dwelling approvals numbers yesterday and said, and I quote, maybe this economy is looking better than we all thought. And it was a big rise, a very big rise. We thought the building sector was going to go off the boil.
Yep.
And Craig James thinks interest rates down, that's helped the market. But it's good to see the housing sector, which is a very big multiplier effects on the economy, looking good. And as you're right, on Thursday, the investment numbers come through. The last one we got for 2016-17 prediction numbers were better than expected. I hope that picks up because investment and wages growth are the two things I worry about, the Aussie economy. Everything else is pretty good. We're growing faster than most Western economies.
I think retail sales is out today or tomorrow. They've been on the flat side, but the problem with all those numbers, and I think we're sort of underestimating this, is there's so much deflation or disruption occurring where companies can't increase prices or because of competition are being forced to lower prices. Yeah. You tend to sort of say that the economy's not really growing, but I think things are pretty busy still, but you can't. It's hard to see.
Volumes are there,
prices aren't, and that's what's impacting that data.
Yeah, exactly right. Now let's talk about earnings season, Paul. If you had to wrap up the whole earnings season, what would you say about it?
Look, I think you give it about 6 out of 10.
You're a hard marker.
Well, look, it came in
7, easy 7.
It's an easy 7. Look, some positives out of earnings season. I think the resources companies did better than people expected. Yeah. So they've certainly, the BHPs, the Rios, the Woodsides, the Fortescues, they've done a lot of work on their cost base, and so they're actually looking in a lot better shape. That's why. If you look at the market this year, the materials sector, that is the BHP, Rio, Fortescue, is up. It's probably the best performing sector on the market. And so that tells you something. The market's already on top of, has seen this coming. As did some of the consumer discretionary companies do a little bit better. There were some disappointments on the health side. Financial still a bit troubled. There are some good companies and I don't know, it's hard to get too excited, but our market hasn't sold off. I think that's probably one of the biggest takes out of the reporting season.
Very interesting, a lot of people have been wondering, companies reported badly, Woolworths, BHP, and the share price went up. So is that a good sign?
Yeah, I mean, I think they're in the beaten up category, I think Woolworths. I think the market got ahead of itself from Woolworths, and I think the retracement we've seen in the last couple of days is no surprise. In fact, a brilliant article I know of on Switzer Super Report the other week covered.
I presume you wrote.
But look, one of the stars, I mean, if I look back on some of the really good companies, JB Hi-Fi was probably one of the best. Treasury Wines Estates was another best, great report. Ramsay yesterday sort of nailed it for me. I mean, have a look at what I write about tomorrow with Switzer Daily, but look at that share price over 18 years. It is the best company, bar none, in Australia.
Two things stand out to me.
And priced for it too.
But two things, if we take out the BHP record loss and the crappy miners, most other companies are doing well. And the most important thing is, even though collective earnings are down 8%, that's when you put all the companies' earnings together. Going forward, the prediction is an 8% growth. So that's a 16% turnaround. 8% down, 8% up, 16% turnaround. That has to say something about the economy as well. If companies are doing better, the economy must be doing better.
And look at the Comsec data that said the median company increased profits by about 4.5%. So that's the median company. So look, there is profit growth there. It's just that, in this environment of, lower inflation, price deflation, where it's volumes are going up, but not necessarily prices.
Yeah.
The growth, we've got to get used to a lower rate of growth. And I think that's why the market sort of just continues to grind higher, although with some challenges.
That's the bell. Okay, so let's try and work out what are going to be the big things moving the market going forward. Do you think by Christmas time the market will be up? First question. Second one, in between, do you think they'll sell off?
I think the market by Christmas time will be up, but I think we're going to follow a US lead, and it looks like there's a bit more noise building towards the increase in rates in the US coming quicker. We're starting to see that in the currency a bit pick up, so the Aussie dollar's now testing back 75 cents again.
Good.
I think we're probably with you. If we do get a Fed increase, they sell off initially, but maybe rally afterwards. So we're going to follow the US. We're looking for a lead. We're now sort of in a vacuum, and whatever the US does, we'll follow.
Yeah, I like the word does.
Does?
Now, going forward, on Friday, we get the jobs report in the US. Really important. If there's more than 180,000 jobs, there'll be people saying, there should be a rate rise in September. That could spook the stock market. By the way, today, very good consumer confidence number out of the US. Expected 97, got 101. So the beauty of all this I see happening is if they talk about a September rate rise and it happens, the stock market will sell off. We've seen every time they talk about a rate rise, the market's gone down. So when it happens, they'll do it. But that's going to be the buying opportunity of a lifetime.
And I think the one thing interesting is whether the financial sector will follow the lead from the US. So last night, the financial sector in the US is the one sector that's up, because the more they talk about a rate rise, the more they're going to buy financials in the US. They've been the laggard sector so far, but have done best in August. Hasn't yet spilled into our banks, but look, we tend to follow suit.
We do tend to follow
watch for that.
suit.
Maybe our banks are starting to look a little more attractive.
And I noticed one last thing before we go. Ord Minnett has raised its target on ANZ to $31. It's currently 26. If they're right, $5 on 26, that's a 16% gain, plus dividends, plus franking credits. It's the buy of the century.
Even by your maths, Peter, that sounds pretty good.
Yes, right. So I'm Peter Switzer.
I'm Paul Rickard.
And we're mad about money.